So now we're going to cover banker blocks. What is a banker block? A banker block is where liquidity has broken structure and where smart money are leaving clues where they want price to retest again so they can get in cheaper or at a premium price. So what do I mean by that? So let's start with just the simple principles of structure. So for example, obviously price drops to the downside, it pulls back, drops to the downside, pulls back, drops to the downside, pulls back, right? Simple structure. Now, how does the market actually move? It's a completely different ball game. So price will drop down. It's obviously going to move in zigzags and waves, etc. Then it drops again. It's probably a pullback. Drops again. And it drops again. So let's actually identify the levels of the banker block. So for example, if we follow structure around, this is our current low, as you can see, right? And what was the move that actually took out structure? So you'll notice how you can have a supply level here, for example, and you'll realize that, hold on a minute, price maybe potentially reverse just a little bit sooner. But what you need to understand is what's the previous move that took out structure? It was actually caused by this previous leg up before the break of structure, which was caused by this level. So now what we do is we implement the banker block, we just do the zone. And this is the actual indicator. It's called the glam box. If you want to actually implement it, just do a zone such as this. In terms of the settings, you can do your own settings or just copy this. For example, visibility is on all the time frames, coordinates, leave it the same. Style is where you can edit it. I've only kept the 0, the 1, and the 0.5. The labels are such as this: background, no background, and 0 and 1, etc. So this is the banker block right now that took out the previous structure. So let's actually zoom in and study it and to see what we can find and forecast in advance. So what we do is we implement the blue-ray line, right? The blue-ray line, again, it's here on the left as a horizontal ray. Cool. So we add the 50%, put the horizontal line onto the 50%, and we're expecting a pullback eventually at that banker block, right? Now, the next thing that happened was what? It made a new low. Always go back to the previous structure. So we've got the low, the previous high, the new low. Now we've got the new high and then the new low, etc. So now what you can see is price obviously dropped to the downside. And if we follow structure, as you can see, this is now the significant level. And then what was the level that took out structure? This particular move here, the break of structure, was caused by the previous leg up, caused by this banker block. So what we do is we implement the 50% horizontal rate, and this is where price reverses from. Now, obviously, I should have done it like this, but this is the principle. So now this banker block got activated, and now we're still stuck within this bearish move. This is just a big bearish move here. So regardless of what's happening in the middle, you can get new highs, new lows, banker blocks can trigger, it can still mess around, but now everything in the middle is just a large correction. So let's keep following the market around. And as you can see, price obviously broke to the downside. And what's likely to happen next? Now, normally with supply and demand, yes, this is the main extreme supply and demand level, right? This is the main premium supply level. However, the banker block, the move that actually broke out structure, was caused by this significant move. So this is where price is likely to reverse from. And this is why you'll notice that on some of your markets, you might have a limit order at this supply level for whatever reason. You've got your confluences, etc., only to find out that the market completely reverses from this particular move and then just plummets. Right, so it's based off the most recent significant previous leg up before the break of structure. So you end up missing a trade, but with the banker block, not only do you get involved, you also get a pretty decent risk reward. just set your order at the 50%, stop loss just above the range, and obviously your TP can be towards the next banker block to the left. So these are just examples of bearish banker blocks. Okay, now let's look at bullish banker blocks. So again, the same principle applies. Price rallies, pulls back, and there's a rally to the upside, right? So if we implement the structure, so the break of structure was caused by, wasn't caused by this significant move, it was caused by this significant previous leg down. So this is where you implement the banker block. And that's where price is likely to reverse from. Eventually, you can just set your order at the 50, stop loss just a little bit below, and your TP wherever it is. And you'll notice that the risk walls are pretty significant. And you'll notice that most of the time, yes, it does actually reverse from this, and then it goes long. Obviously, there's more details and more rules in place, but this is just the principle, just to get you guys focused and aware of how it looks like. So again, let's just continue moving with the market. Finally, there's a bit of a leg up, but remember, always remember to look back at the most significant areas. It broke structure, right? Caused by this move here. Now, most of the time you'll notice that the basic structure is really based off this significant move up, right? This is a very basic retail way of identifying structure, but the way smart money does it, they base it on the most recent banker blocks right there. So let's continue moving forward with the banker block. Price is going down. Where do you think price is likely to reverse from? Is it likely to reverse from here? Is this our target? Is this our target? Or is this our target? Again, same principle. What was the move that took out structure? So we just clone this, add it on the way up, caused by this significant banker block, as you can see. So this is where price is likely to reverse from. Price then obviously can continue dropping and dropping. Eventually there's a rejection. Now, let's say there's a rejection and price completely drops from here. Obviously this is going to happen. The market's never going to move perfect. So if we now, again, don't forget to go back. It started from here. It then broke structure to the upside, caused by this significant move. Then price dropped. It rejected off the banker block. It then went long. You're still holding the trade. Eventually, it made a new high caused by this significant move here. Price then obviously dropped, would have triggered you in, but now you've probably gone into a loss. But then, since this is the most recent significant, right here, that's the most significant structure, this is what we're looking at. So now, the new updated banker block, the reversal banker block, is based off this significant move. So we're expecting a pullback eventually towards this particular level. And we just move with the market and adapt to whatever the market's telling us. So right now we went from bullish to all of a sudden now we are bearish because it made a new structure low. And then let's study this particular banker block here. But before we do that, let's remember, let's follow structure. Price is obviously going up. Pullbacks, little pullbacks, pullbacks. This is a very clear structure break, right? Nice strong body close above. So we've identified it's completely changed structure. So now we're looking at this particular area as the new low, and this is obviously the new high. And from what we can see that price did in fact close below. A couple of candlesticks is fine. 2 or 3 candlesticks below structure is fine. And what was the move that took a structure? We can see that there's this particular leg down caused by the previous leg up. You look to the right, and that's the reason price reversed from this particular area. But then where is our potential TP? We can clearly see that there's a banker block here. But before we do that, notice how it broke structure here to the left. So price is likely to retest from this particular area. And we can see there was a small rejection. Eventually it just continued to go short. But that's a good area to be taking profit from the market. So let's actually do another example. Let's go to a random place actually. I'm just going to go randomly anywhere. Since the live markets, it's just not ready yet. Let's just completely just freestyle this, everyone. Okay, let's say we'll go on the 1 hour, and let's just say we go hit wherever. We're just gonna go anywhere. Remember, this is just a random freestyle backtest, but when you're trading the live markets, you don't know what's gonna happen, obviously, it's all hindsight. But we can have an edge and an advantage if we follow structure prior to that. So let's actually follow structure prior to that. So what can we see? The most recent structure to me started from here because it made a new high. So now really we are actually bullish, but we're reversal traders. I would rather take a reversal trade than a continuation trade. I'll cover that in a different video. Before we do anything, we do our zones and we just move with the market. So let's move with the market. This is a very clear, confident structure break. It broke structure to the downside caused by this previous leg up before the structure break. So this is a good area to be entering and executing the trade. So let's see what happens. But remember, before we do anything, we identify that this is the most relevant and previous lows and highs, but now we've made a new low, right? So the new low is here and the new more relevant high is now here. So let's actually go with the market. Let's see what happens. Okay, now we've made a completely new low and a completely new high. So now this particular move has now broken structure. This was the previous leg up. And as you can see, this is now the new high. This is now the new low. And the previous leg up before the structure break is this banker block. So let's just go with the market. It's as simple as this. Right now, these are continuation banker blocks. Okay, now we've got a new structure low, as you can see. So the new low is down here. The new high would be here. The reason it's here and not here is because here is where the most recent banker block is, right there. That was the move that took out structure here to the left. So as you can see, price rejected from this area. Let's see what happens. Okay, it's slowly dropping, but again, it's still in bearish territory. And why is that? It's because we can see that price hasn't really broken convincingly in the previous most significant high. It's just completed a liquidity hunt. We need something convincing, right? Like a strong body candlestick, or at least 1, 2, 3 average body candlestick closes. So at the moment, we are still stuck within this range. So we're still bearish. So let's see what happens. Still bearish. Been triggered in, still bearish. And the reason I keep on saying we're still bearish is, look, if we follow structure, it hasn't really broken it. It's just completed a liquidity grab, right? So we are still stuck within this range. Even down here, it's just a big range, bunch of spikes, nothing convincing yet. So let's see what happens. Oh, look at this. Okay, now there's been a structure breakdown here. Right, there's been a structure breakdown there. It was caused by this significant move, which obviously failed, completely failed immediately. But now it's made a new high caused by this previous move. So now there's a new high, and now this is the new low. So now we are actually, in fact, stuck within this bullish trend. So right now we're going to see probably a big range. But let's see what happens next. Before we implement anything, the previous structure, remember it was down here. What caused it? We need to look back. What caused that move? We need to update its banker block to now this significant move. And the reason it's this significant move is because before we follow it back, before the break of structure, this was the previous little leg before it struck structure. So the previous leg down before the break of structure forms the banker block. So let's see what happens. Let's go to the market. Again, liquidity grab, irrelevant at the moment. Stuck within a range. still stuck within a range. And now we're approaching a potential area of the banker block. Now remember, 50% is the ideal area for the retest. And yes, it can also retest the very top end of the banker block. But normally you'll realize that this is actually a bank level, which is a different part of the strategy, which I'll cover in a different video. But right now, let's focus on the banker block 50% level. Let's see what happens. Oh, okay. We got triggered in. Price then dropped, broke the banker block, but hasn't really taken that structure. But if we zoom in, what can we see? A couple of strong bearish candlesticks caused by this previous little leg move here. So now this is the most relevant banker block. See what happens. And it did in fact retest the banker block. Didn't retest the 50, but it did retest the actual zone. But now, again, we move with the market. This is now the new structure. The new banker block will be up here. The new entry would be here. And now we've got a new high and a new low, right? So this is the new low and the new high. So let's see what happens. Okay, there we go. So now we've got a new low and a new high. Let's follow the market. Took out structure at this particular area. It took a structure here. Didn't take out structure because of one candlestick. It needs to be a lot bigger than that, or at least a couple of small ones below the previous structure. So this is just a liquidity grab. What did take out structure, in fact, was this particular move here, again, caused by these bunch of strong candlestick closes. And what was the move that took out that move, that broke structure? It was, in fact, again, you guessed it, this banker block based on this previous leg up. This is the previous leg up before the structure break. This is a structure break. So now we're expecting a retest towards this area, and then we sell the market. Let's see what happens. Okay, it's completely failed. Again, I'm just freestyling this, guys. I'm not picking random trades and showing you a bunch of winners. I'm showing you exactly how the market can potentially move and how you need to adjust to it. So this would have failed. And again, would I be taking this trade? I don't know. I need to analyze it in detail. I need to see if the structure is correct, the momentum, is the boomerang valid, is there a pattern there, is there a bank level there, etc. You don't just take a banker block by itself, because as you can see, a lot of them fail. This is why you need to have multiple confluences, just like any other strategy. But right now, I'm just showing you guys how to identify a banker block. So clearly we took out structure. And that move was caused by all of this previous structure here. Because remember, we would have seen this on hindsight. Took out structure, made a new high. That's a pretty strong candlestick. So we're looking at this as the most relevant structure low, and that's the most relevant structure high. Price then dropped, triggered us in. See what happens. Okay, completely broke out structure. Again, this is just a good exercise to understand banker blocks, right? So I don't mind if I show you guys a complete freestyle and I'm losing 10 trades in a row. Again, I would never enter these trades unless the rules and the confluences are there. So practice this exercise is very, very important. Then obviously on the next videos, I'll be showing you the case studies and actual trades I've taken and banker blocks with valid rules and the valid confluences. So again, took out structure. What was the previous leg down that took out structure? It was literally this leg up, took out structure. So this is the most relevant banker block right there. So that's where price is likely to reverse from. This is the most relevant high. This is the most relevant low. Okay, let's see what happens. And again, you know, there's going to be confluences here. There's going to be a bank level here, all these other areas that you need to be wary of. But at the moment, we're just slowly building the puzzle of the boomerang and the boomerang slingshot. But right now, let's just work on identifying what is a banker block. So again, prices are rallying. Okay, would have triggered us in. So dropping, and let's actually follow the market around. So we're still within this range here, right? So we've done the structure break. It's actually identified as that was the structure break, but this is the most relevant high. And this is the most relevant low. And again, if you were to take this particular trade, yes, it would have been a good little bank of a quick 3-4 hour. But again, would I really be taking it? Probably not, you know, because there's lots of momentum and there's no boomerang. There's no other confluences. Again, we are just identifying the muscle memory to identify what is a banker block. Still stuck within this range. And there we have it. There's a strong convincing pullback. So now the most relevant low is here. The most relevant high is not here, it's not here, it's not here, it's here. The reason it's here is simply because this was the previous move. You see this previous leg up? This was the move that took at the most recent structure. So now we're expecting a pullback towards this banker block to go short. So let's see what happens. This is the pullback. This is the banker block. And again, you're going to have a banker block within a banker block on the smaller time frame. You're going to most likely get one here as well. So we'll cover multi-time frame analysis in another video. But this is more or less the point of interest that we're interested in. But this to me looks more of a decent trade. And the reason this is more decent is because we've got momentum to the downside and then we've got compression. So this is something I'll rather take. And then maybe we might have a boomerang here. We've got a 1, a 2, and a potential boomerang. So these are the kind of trades I'll be taking. All the other ones, I'm just free selling. Even this one, again, I probably won't take it because I'm not analyzing it properly. We need 3, 4, 5 confluences to actually take a trade. Right now, we've only got 2 confluences. The first confluence is the banker block. The second confluence is compression. That's all we've got. We need 4 or 5 confluences to actually take a banker block setup. Or in my case, a boomerang setup. So let's see what happens. There we have it. Okay, drop to the downside. And, you know, I did say that there was a 15-minute banker block. And if we did enter this trade, the risk would have been pretty decent, 12R. But again, you need confluences, guys. All the other ones, there's no confluences. This only had 2. Imagine having 4 or 5 confluences when you take a boomerang setup. And I did even say that there's a potential boomerang here, right? And again, where's the boomerang? It's a 1, 2, and a fake out, and then a drop to the downside. So we're catching these moves here. But again, would I be taking this? I don't know. I need to analyze it properly. I'm completely freestyling with you guys. But you know what? Now I've spotted a third confluence. Look at this. Now it's looking more probable. This is looking pretty decent. So we've got the 1, we've got the 2, the 3 is above, we've got the banker block, and we've got compression, and we've even got another setup here. Look, this is what I'm looking for. Now we've got multiple confluences. So we've got this particular large channel, then we've got a pattern within a pattern, and then a smaller pattern here. We zoom into the 5-minute time frame. So these are the trades I'm interested in. Notice how out of all the trades, I'm completely just freestyling. But when I spotted something that's more of a high probability trade, I immediately had to just spot it out, right? Because it had multiple confluences. But again, this might not even be enough when I show you everything in detail. This is just a banker block. There's going to be imbalances, bank levels, patterns within patterns, what's a valid boomerang, multi-time from analysis, etc. So all the rules will be noted out on a separate video.